Good morning, good afternoon, good evening, investors. My name's Taylor Watson, Watch Investing, and today we're doing our usual monthly challenge update, portfolio overview, and a general chatter about the market and all things investing. To kick off the video, we get started on our investing challenge, where every subscriber we grow over the month, we put $1 into Triple M, our subscriber growth stock. And for each video we make, we put in another $25. And since the last video, we had 283. Now we're at 289. So we're going to put another $6 into Triple M. And this video itself counts as another one of those videos. So we're going to put in 31. And it's as simple as that, really. If you want me to spend money, hit that subscribe button, share the video around if you enjoyed it, or just tune in and keep updated on my investing journey. So it's been pretty volatile since like near the end of last year. Before then, it was kind of just and then COVID came along around here. Had a wee dip, but our portfolio was tiny back then. It's actually quite amazing how small it was just not so long ago, just over 2 years ago. And then we started investing heavily, and then we started seeing the line between invested and the invested like value splitting off. And then we saw this volatility coming in around November. Just here, we had a big peak of like the top value of the market, and our portfolio was at like 5.6k returns. And then we started seeing a very, very bearish market going down to like 1.8. So we lost like, 3.8 grand just like that in returns. But it's creeping back up again, and we're seeing just pretty volatile days. I think today was one of the top 10 worst NASDAQ days in the recent years, negative like 5%. So not great, but we're seeing all of our investments changing over time. Our Apple investment we have been putting in over this little period here where it's been dipping a bit, so we've just been buying more and more, and we got a nice wee chunk there right when I think Warren Buffett bought some more through Berkshire Hathaway. So that was a good steal right there. AT&T paid its dividend just recently, so it paid its dividend in May of $2.80. We were used to seeing those bigger ones before the cut, so now we see how small it was compared to before, and it's actually just over half, so we are happy with that, and it'll continue to grow from then on outwards. Sharesies seems to have changed the way the portfolio naturally sits. It keeps resetting to having like Coca-Cola here and stuff. I thought originally it would be like money invested, but I don't think it is that, because Pepsi's way down here, and then when I hit all, it resets to the normal alphabetical, so it's kind of annoying, but that's how it is. Coca-Cola we put a bit more into, kind of just around here recently. I don't know, it was just has a nice yield, and we haven't put too much in recently, so we jumped that one up. We don't want anything sitting too low in our portfolio to keep it nice and diversified. And yeah, similar with Colgate and Procter & Gamble, we're just upping those stakes in the portfolio essentially. Hallensteins paid us its dividend in April, and I'll be showing that in just a moment. Nice high yield, a little bit lower than we were expecting really. They had a wee bit of a cut, which is not really what we want to see. We're going to hope that that December one is more in the $30 range, otherwise it is not looking good for the future. And yeah, I think it should be fine in December, because New Zealand is opening up a lot of travel now, and Australia as well, so that is the primary locations of those Hallenstein stores. And online sales, of course, have always been growing. It's just got to offset the physical disadvantage. Not much else has changed. It's been a pretty stale month, just super volatile. We've kind of been going into those tech-heavy stocks, which have been seeing the most volatility, like Tesla. I have been chunking some money into, especially around this $870 mark, and the 800s down here. It's kind of the sweet spot for where I'm happy to put some in. And my recent investments have been pretty big buys actually, 50, 25, 75, 50, 25, and when you're on minimum wage, this is quite a big chunk out of my weekly kind of spending. And hopefully we will be seeing another share split that they did announce in the future. They did delay it, I believe, so we won't be seeing it for a little bit, but we're not too fussed about that. It doesn't materially change too much. It just makes it slightly easier to demand and buy, and kind of makes it easier for Tesla to pay stock options and kind of compensation to their employees. So it is a very slight change, and kind of different investing ETFs can find it easier to pick it up now as well. So there will be a slight material effect, but not too noticeable. It's kind of just nice to see that my 4.2 shares in Tesla on Sharesies will go to like 20 once they do the 5-to-1 split, which will be pretty cool. And in Apple we did actually do some quite big buys as well. During April we did 20, 25, 25, 38, another like 26 here, and another 4 or 5. So we have been gradually growing this up. We went from 1125 to 1265, so over 100 more in there. And we're just really trying to grow those two big ones, as their dividends in the long-term future should be insane. Tesla may never pay one, but I believe in the decade or two ahead they will. And if I still see Tesla being that amazing company I see it as now, I will be holding it for that long and hopefully getting that insane return. Other than that, we've been kind of dollar cost averaging into this dip of the bond. I haven't really looked into other bond options. This is just kind of a nice monthly dividend of 2%, and we've kind of just been dollar cost averaging. Every kind of week we put in money, we put in another $2 to $4 into this, and every time it pays a dividend, which is every month, we just buy more and more of it and average down. And if it does keep dipping lower and lower, it's currently like at an all-time low over the 5 years, which is kind of good for the dividend yield. We're just going to kind of keep growing that really, and just keep seeing these dividends get bigger and bigger and bigger and bigger. And same with Realty Income Corp. It has had a massive kind of dip here, like 10% or so. So we may be looking at buying some more at that 4%. As their dividends have been going up and up and up and up and up according to our stake, and this one's $1.65, which is like 60% bigger than our last one. So I don't think we did too many big buys since that was 21st of April. Ex-dividend date was the 2nd of April. I don't actually think we did too many big buys. Like, we did a few bucks here and there, but nothing insane. So I'm actually a little confused why that's so much bigger. Maybe I'm just missing something. But the portfolio is fairly much the same, just taking those really big hits on some stocks like Fisher and Paykel and NZX, and Hallensteins a bit of a hit as well. And this monthly one here, we've just been buying whenever we've got those like little cents left over, and those dividends keep going up and up and up and up as well. And it's nice monthly $2 to $3 US coming in, which is like $4.55 NZD coming in each month. So that is becoming $50 to $60 a year, which is pretty good for 435 put in. That's USD, so it's roughly like 600 put in or something. So that's actually not too bad of a return, and it really offsets some of these other things. Disney itself has been going through the ringer, or the rings, or whatever the saying is, because they're stepping into the political bounds and have been in the past, but it's getting quite serious now. And it's really taken a hit on their stock. I don't know how bad financially it'll affect them, because it's pretty hard to determine. I think they just need to take a step back and really evaluate what they're doing as a company. I will probably keep investing. Since it has dipped quite a bit, my next week's investment will probably be a bit into Disney, as it has dropped off 30% or more. More than 30% from its kind of highs when I started kind of buying it here, and it's back to the initial purchase price really, and a little bit below it. So I will probably be buying a bit more. And because their parks should be doing really well now and should grow into the future. Disney Plus, the content they have on there is amazing and keeps being amazing. Netflix is having its own problems with their business structure, and Disney has a good opportunity to jump in there and take advantage of that. But yeah, that is pretty much the Sharesies kind of overview of the portfolio, and then we'll get straight into the spreadsheet, the interesting, colourful part in my eyes, and we will head straight down to the month of April. We hit $39.51 in dividends, and we'll scroll down to find those dividend payers. All here, we've got the monthly one of the Global X, we've got the Realty Income Corp, and I think the Global X actually paid twice in April, which is surprising. So it either paid May's one early or March's one late. I'm not actually too sure, or I just made a typo. No, I think that's right. And we also got our monthly bond one, so 3 monthly ones there. But then we got our S&P 500, Pepsi, Coca-Cola, Hallensteins, our big favourite, and that is how we got to that $39.51. And that is making our total dividends received over time head up to $440 pretty much, and that is super cool. And that includes the few dollars we got in May so far from AT&T. But our average dividends received per month, including the first kind of 9 months that we didn't actually do anything, is up to $11.26. But trailing average of the last 6 months is heading up towards kind of $25, $26, which is really good because if we want to start hitting higher and higher dividend goals, we really need that average to start getting up there. And the trailing 12 month of dividends is also growing as well. And those are things we really want to be seeing. And when we add that $39.51, we get that beautiful, beautiful staircase. And even with the Hallensteins cut of about $9 to that dividend, and just the market performing quite averagely, we still pretty much hit last year's number on the dividends, even though we've had a really big portfolio revamp away from New Zealand stocks and more into the US market. And that has severely changed our portfolio, but the dividends keep coming in nice and high. May is going to be a lot lower than $40, I can tell you that. It will be probably over 10, which will be super sick to see the comparison of the months, but we do not think it will be this kind of high. Super cool to see that our total is up to $81.26, already way past 2019, and a third of the way through the year, we are 75% of 2020. So it's a lot of numbers, but it is a cool comparison to make. And a third of the way through the year, we are more than a third of last year's, only just, but we are there. And we are kind of just below the mark on hitting our full year goal at the moment. Of course, these first 3 quarters will be bigger in these next 3, just based on we reinvest the dividends, we invest weekly into the companies, and sometimes every once in a while they do a dividend raise, like Apple and Pepsi raised 5%, I believe. Procter & Gamble raised 5%. I believe Visa last year did a big raise, so those just get bigger and bigger, so it will be closer and closer. And so this 81 over the next kind of 4 months will maybe be another 85 kind of thing. So we'll be hitting closer and closer to that goal of, I think, 333. I think we will miss it. I think we'll get maybe 275 now is kind of my thinking. But we're still going to strive for that 333. I just think that I won't have quite the yield on the portfolio to get there. And probably over the next month, I will be investing a little bit less than my normal kind of $100 a week, as I have a friend coming down from Australia and I'd like to go snowboarding. Trish hasn't gone snowboarding before, so I want to try that out. And yeah, kind of just need that extra bank in the pocket pretty much. And we'll just put a wee pause on our usual investing habits and then get back into it later on. But yeah, our dividend guess for May is going to be, we've already received $4.27 from AT&T. We've got our monthly ones coming in. So the monthly ones normally pay that much. Global X probably paid the May one early in April, so we might miss that one. I'm not actually sure. What else pays in May? I think Apple pays in May. Apple's not too big of a dividend. I'm going to guess $11.11 because I like my symmetry of having the same number. As you can tell by my dividend guess for the year of 222, and then this year's going to be 333. I like my number combinations. But if we update this quarterly dividends graph to include this most recent number, how are we doing that? A10 to B23, A10 to B23. I just haven't added it into here because that's meant to be 2022. Crikey, I've had a little bit of error in our portfolio tracker. So that should be sweet, and then we just change that to 24, and we're good as gold. Boom. Alrighty, so now that's pretty amazing actually. The first month of quarter 2 is already the size of the last 3 months of quarter 1. So that's pretty amazing actually, because May, if we get around $11, it goes straight up to 50, so it's already 20% bigger. And then we get June, which is normally quite a big one. It'll be quite different since we don't have all those New Zealand semi-annuals paying in June. Because if we go by 1, 2, 3, March is the biggest, so we'll be sitting around another $20.39 in June. So it will be roughly on the 20 mark, so that will hit about 70 for quarter 2, so slightly bigger than quarter 2 of last year, which makes complete sense. So that is actually looking really sweet, and that trend line will continue going up as we invest more and more. So the total dividends was $39.51. My guess was 32, severely under the mark by like 20% or more. Same with Project Frugal. He's been pessimistic because the Hallensteins, so was I, guessing way under me as well. But Trish, being the bull of guessing 42, a very high guess, and I really thought I was going to be bang on the money at kind of halfway through the month, as I was sitting around 34 and didn't really expect anything else come in. But that Global X dividend coming in of like $5 put it right up to 39. So Trish coming in with the victory this month. I think she's probably won it about the same amount of times I have, which is pretty funny. I might have to go back one day when I'm just chilling and just see who's actually won the most between me and Trish and Project Frugal, our regular guesser. I think that'd be quite funny to see if I'm getting beaten on my own portfolio guessing the most, even though I have the most information. It might convince me to take a little bit more thought in my guesses and do them less on the spot and pre-plan them, but that might just be seen as try-harding. We'll never know. The weightings we haven't actually updated in a while, so this has our number of shares of March, so it's got the rough kind of weightings. This will be slightly different as we've put in a lot of money into Tesla and Apple recently, nothing into Hallensteins, a bit into the S&P 500, and kind of a good split into these. Triple M should actually probably be higher than Westpac now, in terms of market value, because we have been putting in a lot into Triple M. And some of these other ones will have gone up quite a bit as well. And it's nice to see that our smallest is now sitting around 300, and the average is probably around 5 to 600, which is pretty cool. And the portfolio at market is valued at 21 according to March, but I think it's going to be much higher than that, as our shares is already at 19.5, and then when we include our Hatch portfolio, that sits around 3. That makes it super easy as well. Boom, it's sitting around 3, so we are sitting around at 22.5 total value, which is not too bad at all. This is fully updated to include all of the dividends we've been paid by these current companies that I own. So it's nice to see these all kind of trending upwards. Hallensteins did have that big cut, just like AT&T, but we should see in the future that continue to grow upwards as well as we reinvest the dividends, and hopefully they perform better in the future. They have a good odd too. Same with Fisher and Paykel, kind of showing that similar up and up and up, and then this last recent one's been a bit of a dip. NZX, again, just up and up and up, exactly what we want to see, and a big jump here as we put in heaps more when it had quite a stock value decrease. And then we've got lots of these American companies just really consistent, unlike the New Zealand ones, they're not too consistent, and it's just lovely to see those nice staircases, and like the monthly pay is just really satisfying to look at, really. Like, to be honest, even if the portfolio dropped another 10%, I'd just be looking at these going, it's worth it. Looks cool. But yeah, Westpac should be paying a dividend pretty soon. Or is that already one? I can't actually remember. But Westpac is our second biggest payer in terms of value per dividend. So that would be pretty cool to see the next one, as I think it is their final one, so it's bigger than the semi-annual one. So that should maybe be 15 the next time, which would be pretty sick. AT&T, we can see they up and up and up, and then the dip. Hopefully we continue to see it trending upwards in the future as well. Again, just these monthly payers looking amazing, and this super big jump as we invest more and more into it as it drops. Same here with QYLD. Just lovely to see these lines all increasing. Working, we recently updated this about 2 weeks ago, and we haven't invested too much, maybe an extra $100 or two. But yeah, it's cool to see that our weekly investment needed to hit our goal is dropping below that 100 mark, as I am happily investing 100 at the moment, but plan to decrease it for the next month or so, as I want to spend more of my money in the present time than save it for the future. Our shares in Tesla is heading almost to 7. I think we're at roughly 6.4 if we include our current numbers, so we are well on the way, and it's becoming really comfortable weekly amounts that we need to hit these targets that I kind of set out for myself. Shares in Triple M, I'm pretty sure we've already achieved it now with this $35 investment pretty much. Pretty close really. And so we're going to hit all 3 of these goals by the end of the year, which is actually really, really cool. Our net worth tracker has kind of been all over the show really. We've kind of added in just a rough estimate of what's going on here. I've got a more detailed one under this section, and I've got another spreadsheet with a budget. But it's a bit more private for now. We've got our student loan, which I think we've paid back more of it now. So we've kind of just got estimates. And debt to parents, I think this one's actually a lot lower now, paying that off slowly. Net worth over time, decreasing while at uni, increasing every time the year starts as we get more fees. And since December, at the end of the year, it started decreasing as the stock market was doing insanely well, and we weren't spending much. But then as we were moving out of home, we needed to pay bond, start paying rent, so it started increasing. Then we got full-time work, and it started decreasing again. So it's cool to know what is causing all the different numbers. And we hit our peak debt in November at 43,330, and we've decreased that over the months, and now it's only at 41,900. And KiwiSaver has been growing to 4,700. So a year ago it was only at 3,000, so $1,700 there. And when it hits June, July this year, we'll get another 500 from the government for free, which is super cool. Our investments, April last year, about 10,000 difference, which is huge when we weren't working that much during uni. So we really should see the difference get bigger and bigger over time. And then we've just got our general savings and spending and the total outcome. And this will be super cool to look back on in the future. And that is pretty much the general overview of the portfolio. We're going to be leaving it with a guess of $11.11 for May. I'm probably lowballing it again, so if you do want to have a good go at beating me, probably guess higher, or I'm talking shit. Who knows? That is the numbers of the month. Hopefully in the next week or two I will be uploading a non-challenge video, as I've been pretty lazy in the past actually. I think my most recent videos have kind of all just been the monthly dividend challenge. We made the Earth 2 one, but the last 1, 2, 3, including this one, have just been the challenge. I think next week I'll try fit in kind of a market overview update, go over Tesla's earnings and all the other company earnings, and just kind of giving you guys an update on the companies that I own, what's actually happening with them and their bottom line, and kind of Tesla is our biggest holding, going over kind of the I guess the attempted competitors' numbers compared to Tesla's, and just really seeing how the future is going to turn out, and how the stock price has kind of flatlined and actually gone down 25% over the year, even though Tesla's been absolutely smashing it. Yes, that should hopefully be something next week. Otherwise, it'll happen when it happens. But yeah, that has been What's Investing, my portfolio progress, the journey, and we continue to get those nice dividends every month, and it compounds itself over time. Hopefully we will be seeing the dividend increases from the American companies to keep coming in, as we've seen Coca-Cola, kind of Procter & Gamble, Pepsi, Visa, all those give a raise, and Apple. Hopefully we see like Microsoft, McDonald's and all that continue to give their dividend raises as their profits increase, as that is what we love to see. I'm really hoping that Realty Income Corp starts doing bigger raises. I know they don't really have much wiggle room to do, but they've kind of just been doing like half-cent, or not even half-cent, but like bloody 20th of a cent raises kind of stuff, and like, I don't know, they're on the 4th decimal place kind of raises, which is pretty silly. Hopefully those get bigger. But that has been our portfolio. And yeah, thanks for tuning in. Catch you guys next time. Happy investing. Leave any comments below, any questions, any investment related things. Feel free to hit me up. Other than that, have a good week, have a good month. See you next time.